Okay, quick Friday morning radar update for the second time because I forgot to press record. So we've got a gap. We've got a move up today through multi-day highs on a couple of these markets. We're going to get a gap in the US. So if they hold up, we'll get the gap. We always say mind the gap, let the gap play out first, and then see where they want to take it after the gap trade. So yesterday the gap was down. They closed the gap to the upside, and then that's the markets then sold off again. So we've got a gap up today. Let's see how they want to take this one. Next, I'm just going to go through some markets, and I'll go US dollar first, and then I'm going to try and compress down last night's screening session into about 15 minutes. So dollar, let's talk about the dollar. We've got some markets at extreme levels. Now, we got this big spike higher in the dollar, didn't we? That's this blow off move, and then it went into this downtrend where it was sell the rip, sell bounces into resistance. When the market's in a downtrend, support is not in play, resistance is in play. When the market's in an uptrend, resistance is not in play, support is in play. Always, if you stick by those rules, happy days. Don't trade against the trend. So we got this bottoming action. What's bottoming at? Well, it just started respecting a few levels here. We got a double top and we got a double bottom. So we said up or down. We'll see where the market goes. And we put the arrows on before it broke out, by the way. And it broke out. You can reverse these videos up, go back in the YouTube history and find the talk about this back then. We got something I call the zone of interest, and go to the ShareScope tutorials I've done is the best work I've it's got what I do, and I think you should go and read those tutorials in ShareScope if you're interested in this kind of stuff. Just because if you read it before the market crash, and before the market correction, should I say, and then read it again now, I think you'll learn a lot more about, it depends how long you've been sort of following my work, but you'll understand it a lot better, and you'll have seen a few stocks what I wouldn't touch with this sort of action, and you might have sort of trend surfed them, just watch them with your eyes, and you might understand a bit more about it. So everything I do is in those tutorials in ShareScope. So go and have a read of them over the weekend. Anyway, we've got this big move up in the dollar. Nobody believed the dollar could go up, did they? But yeah, the dollar's going through 52-week highs, and off it goes on its journey. The top was called in it again. Just going to get that across quickly. This game is not about calling tops and bottoms. Even though I will look for interesting levels in the market where I think the market will come to, like an area, I'm not trading tops and bottoms. I never am. The reality is nobody can consistently catch the head, the bottom, or sell the tail, the top. The reality is we all do business. It's about how much we catch of the white meat in between of the fish. So that is the reality. How much does your methodology get out, of the trend? So move on from that one. I'll just quickly go. Let's go Bitcoin. So the view with Bitcoin, always put a log scale on if you compare past price action with recent price action. Once I drew a line on here, I said potential for a big base. Now there is still the potential that we are basically, obviously I haven't got today's prices, we're a day delayed. There is always the potential that this is basically a bear trap. So it's what I call a reverse vol base. It goes a bit wider on the right side, and it dips underneath, and then off it goes back to highs. Now if that is the case, we might see crypto setting up Not in the near future though. Medium future out. It's going to be months if that is the case. I would say for my style, just go back and just say, well, how long did it take for these things to set up again? This one, it went sideways forever, didn't it? 2 years before we got setups again. So just remember that. Another thing, this move didn't compare with this move or this move, did it? This move was a big move. This was a big move too, but not quite as big as the first move. Not far off though. More orderly, I will say. And then this move here, it was a good move, but a few, hundreds of percent still. Well, I'll just go from the move I actually posted. So this was the cheat, and yeah, 600% move. So it was a big move, but obviously not compared to what it's done in the past. So yeah, we're on 52-week lows. We're on 52-week lows here, and we were on 52-week lows here. So yeah, maybe it'll do some action. It's you're going to be watching Bitcoin for that area, aren't you? Anyway, it's dead to us in the near future. Too much information, I know. Moving on. Let's just go TLT. So bonds down, interest rates up. Bonds up, interest rates down. These are the extremes. It's just a channel, very simple. Don't get fancy with putting all different trend lines on these things. Just draw a channel of the history. Draw it out and just say this is extended on the low side. So just respect that is a pretty extended level, and then we'll see. It's like who's going to short these here? Well, maybe it will drop off here and we won't be looking at this channel anymore. But I just want to respect that's the channel. I want to respect, look at the 7 to 10 year there as well. And just, we're seeing some extreme levels on either side is what I'm trying to show you here. Let's just move on from that. Let's go to markets. Oil, oil still technically bullish. I've just marked that little visit to mean trend. Maybe oilers are going to make a little move. Obviously, I'm holding a few oilers still. Things to note when it comes to the markets, and if we start to see setups. One thing, that am I repeating myself? I don't know, but if I asked what sectors are the worst, most people will probably say technology. Now, I would say, in my mind, I think that the sector, what might start to hit the screens might be the sort of technology stocks. I think they might be ready to trend. If the market's going to hold these levels and it is just a correction, it wouldn't surprise me. I'll tell you now, no one will believe it. But point being, what I don't really think is going to hit my screens is stocks where the oil price is eating into the margins. So think about that. It's going to be a struggle. But saying that, if the oil price came back in, things would start to get better for those companies. So you might see acceleration in forward numbers. So yeah, it's connected, isn't it? Anyway, correlations are pretty loose. They do break down. Blah blah blah. So I just want to mention those, and then I just want to move on to. It's the same. Nobody picks the top. Nobody picks the bottom consistently. Even though I have areas on a chart where I think the markets, would happily come into in a correction, or, and where I think, across the board of markets I follow for stocks, I don't trade on them. I trade the stocks. So if I don't see the stocks, I'm still not going to be getting involved, whether the market's bottomed or not. So one thing I will tell you is consistent is when the markets break out, I'll go all the way back again to here. I don't know if I'm repeating myself here because I've run the video with no sound before, so I had to do it again. Off this low here in 2009, this orderly pullback here out of this base, nobody believed it. Wall of worry, it's going lower, everyone was shell shocked. They couldn't believe that stocks could rise. And this one in 2010 I missed because I was in Indonesia, which was fantastic for me for 2 months. This one here, I took part in. I had money running into this. It was awful. It was ugly. But the market went back to 6-month highs. We went back to 52-week highs. Nobody believed stocks could rise. I'll just keep running this forward. I'll just go back into this kind of area here, 15, 16. We got this lower high, lower low, and then we had some known unknowns in the market, didn't we? With Brexit and stuff like that, and the US election. Nobody believed stocks could rise. Stocks rose. It was a pretty choppy sort of period, wasn't it? Through into 2020, the big pandemic crash. In this area here, went into normal correction. The market, my index trend model and my market risk management took me out of the markets here. I actually bought a few. I was in full cash here, and that was stocks were breaking down and hitting my stops, and the trend model was pulling me out of the market. I didn't want to believe that the market was gonna put me into cash, but that's what the market did. It doesn't matter what I think. I just have to abide by the risk the market, places on us. So, well into cash, but getting to my point, and I'll say the same thing over here. The market model pulled me out. It doesn't pull me out very often. Once every few years maximum. Usually trends just end, and I rotate the portfolio. We don't get. It's five events since 2008, I think, have pulled me out. 4 events maybe since 2008 have pulled me out of the market. So this is the point in question. My view is the market throwback, this one here. I'll just go back to this one here. The market throwback, see what the bears have got from here. This is where we started seeing stocks break out. And I was buying breakouts from here. I wasn't buying them off the lows here. There was nothing to do for me there. But not in small cap trends. This is where I started. There was pullbacks actually to buy in small cap trends, but I chose to put it into sort of more liquid swings. This is where stocks started leaving the station. In my head, I thought we were just in a throwback and the market would go lower. But I have to basically abide. I have to when the corky stocks break out of bases, I have to sort of take those stocks, because I know that I'm not, what I think doesn't matter. What is actually happening in front of my eyes is that stocks are breaking out, good growth stocks. So where are we now? Market model pulled me out. Been in high cash for quite some time. Got a lot of cash to put to work. This bounce here was, let's see what the bears have got after it. The first move after the throwback, see what the bears have got. And then this is where we will or won't start to see setups. Going forward from here, it will be interesting. If the market wants to sort of rally, we will see. Now I'll just throw out the caveat, it could take this high out here and still be a lower low. Go and study 2015. But that is my view. It's not about picking tops or bottoms, and I'll quickly just jump into a few stocks. and I'll just, just take a look at stocks, what have been axed, and where that story zone was. So, story zone on best of the best was here. This is where people started telling you to average down it as well, and this is what happened. This was where we were looking at them. Nobody was talking about it when we was seeing it in the screens. I can do the same for Fever Tree. I can do the same for Boo. I can do the same for the old 2/3 retrace is what I call it. And this was where Zoom broke out before the pandemic, and this was what happened on the pandemic. Zoom actually gapped up and then just did a normal pullback. I got involved there. This is what it did. It went on a trending run. It was a swing for me. I did not capture all that. It was a short-term swing, but and then this is what happened. It just went into the wilderness. So these stocks go into the wilderness. But what I'm trying to get across is, I'll bring up, this is common. I'll say it again. This is where we saw it hit the screens. This is where people were all frothy and telling you how good this stock was. Over and over again. People, these trades, these stocks trend as the risk unwinds, or trend as they trade towards that acceleration in growth. And once they post the best numbers, what they cannot beat, sometimes the stock will just go into a basing period where it will go sideways and back and fill as it gets through that deceleration into the next leg up. But a lot of these stocks will just run out of steam and roll over, and the point being is how long they're dead to us for. So 2-3 years and this is still just dead to us, isn't it? Not passing the screens. We did see it at the screens on a very, very short term sort of trend model, but loaded with supply. So when it comes to the stocks what lead the next leg, what I'm trying to say is very few of them will look like this. Most of these stocks, if you look left and see the big move, and then I just say it's the 2/3 retrace, the William O'Neill, 70% of stocks will lose, whatever, 70%, something like that. Anyway, I call it the 2/3 retrace. The strongest will halve in price, and many of the strongest, when they break trend, they will halve in price, and many will just, 2/3 of them will give up 2/3, and some will just give it all up and never to be seen again. If you want to backtest that, make sure you load all the delisted shares, and then that will open your eyes to this. But I'll just throw one more in there. What was Tapica? Same. I'll try not to get on the soapbox, but I see people getting caught, getting trapped by these popular accounts in these frothy areas and telling you how good these stocks are. These are where they left the station. This is where the popular accounts were telling you should be in these, and these are where they told you to average down, and this is lost in the wilderness for 2 or 3 years. And the point I'm making here is if you're averaging down into stocks what have clearly had a huge trending run, and this is one what actually made another move. This is a rarer beast. It's rarer than the ones what just break trend, never to be seen again. The one what does make another move, this is where you get involved again. This is where it's structurally ready, and some of these will fail. But point being, the money in this market area doesn't take part in the next bull market. So the money what's stuck in those stocks, what are lost in the wilderness, it doesn't get to take part in the next bull leg. It's a rarity that does. Backtest it, don't take my word for it, but just thought it's good to recap a few of those. Okay, leave it there.